Good morning, traders and investors. My name is Roger Scott, and I'm bringing this to you live from New York, sunny New York. It's about 7:53 in the morning. I am in Soho, lower middle Manhattan. Not too familiar with New York, but it's beautiful here. Humidity is not as bad as it is in Jax, and the day is just getting started. Now, it's Wednesday. It's July 27th. The market's going to open up in about an hour and 37 minutes to be specific with you. Now, this is really interesting. The market actually rallied on slightly negative news yesterday, and I'll go through that with you right now. So first of all, we had earnings on Google and Microsoft. Google was expecting $1.30 per share. Google came in at, let's see here, $1.21 per share. But look at the stock overnight. The stock is up. You see, this is what I was talking about. A lot of the stocks have been, the estimates, because of the bearish influence, the estimates have been lower than the expected. So the stocks are now coming out better than expected. So the actual stock is rallying on this negative news. That's a very, very bullish sign. The other stock that came out with earnings was Microsoft. And Microsoft was expecting $2.30 per share. And if you look here at Microsoft, you will see that Microsoft actually earned $2.23 per share. And again, they were expecting $2.30 a share. But look at Microsoft. Look at the stock. It's up 3.26%. And right now, as we're talking, the NASDAQ futures are up a lot, quite a bit. Now, this is what I was talking about. The market is starting to turn along with the bond market. And if you look at Microsoft, let me just kind of show you a few ticker symbols. You will see that the charts don't look very, very different from the bond market. See that? And how about Google? Let me show you. Very, very similar. Everything is following the bond market. And the fact that these stocks are actually moving higher on bad news is a very, 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 very positive sign. Matter of fact, if you look at the consumer discretionary sector, you will see exactly the same thing. Notice that? Same thing. And if you look at technology, you will see exactly the same thing. And they're also up. Now, here's where things get interesting. Let me see if I could pull a bar chart here. If I could pull a stock fetcher. Here's where things get really, really interesting. First of all, we're having a major sector rotation moving back into non-boring stocks, into tech stocks. Now, here's, excuse me, sorry about that. Here's where things get interesting. If you look at consumer staples, which has been very defensive, it's been moving sideways, hasn't really moved anywhere. But if you look at technology, look at the uptrend it's been building. Look at the communication sector. Look at the discretionary. So the question is the market going to turn back down and come back down to the lows here, or are we going to rally from these levels? And today it'll be very, very instrumental, especially after the Fed comes out with their data. Now, speaking of Fed data, so for now, everything is following the bond market, which is one of the biggest reasons why you should be following the bond market, especially the TLT, very, very closely, because as you can see, most stocks are following it right now. Now, as far as earnings are concerned, I'm not going to leave you hanging, and I'll give you a full update today if you join my VIP program at 2 p.m. So today we've got Meta. And Meta, again, they're expecting negative 38%. So even if the number's down, I'm thinking the stock may rally because if you look at Meta, you will see that it's been doing exactly the same thing. It's been kind of just moving, went down and kind of now moving choppy. So the question is Meta going to rally on this news? And is the market going to rally or extend the rally today, or is it going to fold the rally because the earnings and on the tech were not great? That's kind of where we're at right now. We're going to have to wait and see because today's going to be a very, very squirrely day with the Fed. And yesterday we had consumer confidence, and the number was within range, but it was below expectations, which means consumers' confidence, which means consumer spending is going to go a little bit to the downside, and that's very, very, very important. Sorry, I'm just fine-tuning this thing, making sure it's straight. So anyhow, today, oh boy, we got durable goods coming out in about half an hour. We got international trades and goods and services coming out in about half an hour. Most importantly, we've got the Fed meeting, and the Fed is going to tell us whether they're raising rates 3/4 of a point, or half a point, or even going 1%, which is not really priced into the market at all right now. I don't think they're going to go that crazy. I think they're going to just do 3/4 of a point and say how if things continue getting worse, they may go to 1, but if things continue getting better, they may just stay at 0.75. So here we are. Traders prepare for a possible sharp interest rate hike, and I'm going to tell you right now, the bond market is well prepared for it. It's priced in 0.75 really, really well. Fed on Wednesday is expected to announce an increase of up to 3/4 of a point. I'm going to tell you right now, if it's not 3/4 of a point, if it's like half a point or a quarter, which I don't think will happen, the market's going to rally like we've never seen before. On Tuesday, Walmart warned inflation has spiked to a 4-decade high. We already know that. It's hurting consumer spending. We could see that consumer confidence is down a little bit. Not crazy, but down a little bit, which is not all that great. But again, Walmart markets were rallying on that news. So I guess, again, a lot of it is priced in. General Motors fell 3.4% after its second quarter. Profits fell 40% from a year ago. Sales fell 15% after shortage of processor chips. But again, these things are coming back. Processing chips are not in a shortage right now. And again, a lot of this has to do with the supply chain, not with a natural, quote, recession, because consumers are still spending. There's a supply chain issue. There's a lot of squirrely stuff going on right now. Now, in terms of the strongest stocks and stocks you should be looking at, the strongest stock, and I'm going to tell you right now, I would be focused right now on, let me show you what I'm liking right now. Quite a lot, actually. I am liking the Lamb Weston Holdings and Lilly, these two stocks right here, Lilly and LW. Let me just show you a real quick chart. LL Lilly. Stock is doing really well. It's a strong buy. It's trending really, really well right now. Remember, healthcare stocks don't have as much of an inflationary factor involved. People are going to be going to doctors no matter what, and I like how it's basing near all-time highs. And LB, like those two stocks, and I think they're going to break out if the market goes higher. That wasn't the right stock. LW, sorry, excuse me. It's only 8 o'clock in the morning. Give me a break here. And I'm still jet lagged, like there's no tomorrow. I like the stock a lot. I like how it's congesting. I like how it held up the last several days. I like the stock. Now, in terms of the most bearish stocks, there's not going to be any news here for you. Royal Caribbean, Norwegian. Hate these stocks right now. I don't think these stocks are going to see any love, especially right now. They have not been holding down very well, and I think they're going to go further down. And I was bearish on the stock right here. Now it's lower. Royal Caribbean and Carnival right here. And they're doing pretty much the same thing. And again, COVID is now at a 6-month hike here in New York. I think these stocks are going to be taking out the low. Other stocks that I'm not really happy about is Dish. Not really loving Dish. Hanes Brands is not doing really well. Expedia. Let's look at Expedia. See, I'm giving you more than your money's worth today. Yeah, this stock is definitely, in my opinion, going to go down. I may actually sell this stock today. I wouldn't be making too many big bets ahead of the reports. Again, we've got earnings on Meta today, and we've got other stocks. Let me show you this. You've got an Align Technology, $2.28 expected. A Metasys, $1.23 expected. AEP, $1.19 expected. Boeing, Avery, Denison. You've got a lot of stocks coming out with earnings. BMY's coming out with earnings. Cheesecake, Churchill Downs, Etsy. I hate that stock. Ford, General Motors, Genuine Parts, Kraft. You've got a lot of consumer staples. O'Reilly, can't wait to hear what they have to say. R. James, Financials coming out. Sherwood-Williams, you name it. Teladoc, United Rentals. And then tomorrow, oh boy, we've got Apple and Amazon. Apple's expecting $1.16, and Amazon is expecting 15 cents. And I think both stocks are going to rally because I think both are going to outperform. Keep your eye on the bond market today, folks, because that's what's going to be giving us the big inclination of where the market is going to go. So that's what you want to pay attention to. Now, before I let you go, so again, longs, you want to go with the LW and Lilly. Shorts, you've got the cruise ships. They're terrible right now. Now, folks, we're in a very unique situation that only comes along once every few years, if that. Investors have pulled money out of the market at rates not seen in a long time. Institutions last month were more bearish than they've been since 2008. Is it a bearish environment? Is it a bullish environment? Markets are going up on negative news. Interest rates are moving sideways, even though they're supposed to be going higher. It's a crazy time right now. Even Jeff Zananeri will agree with me. Speaking of Jeff Zananeri, Jeff Z, he just covered how he's playing the phenomena. He says he's created an amazing opportunity, an incredible opportunity. You've got to check this out because Jeff knows how to trade global markets. He was an institutional guy for many, many years. He managed money. This guy is hot right now. And one thing I love about Jeff is he is not biased to the long side or the short side. You've got to check out what he's got in store for you. Follow the link below this video. If you're watching on YouTube, it's in the descriptor. You don't want to miss out. Jeff is red hot. Check out what he's got in store for you. You will learn from him. I promise you. Every time I talk to Jeff, I learn from him. He learns from me. It's a symbiotic relationship, and we want to get you in on it. Follow the link below. And again, Fed today. Be very, very careful. Positions can go awry. We got to be very, very, very careful today. I'll talk to you later. Send me some comment, feedbacks. Have I been helping you navigate these markets? I want to know. And I want to make sure you guys are getting good quality and video out of this video too, because I'm not in my usual place. Give me feedback, support at marketgeeks.com. Follow the link below. Learn more about Jeff Z. Do it now. Bye.